All right, guys, here we go. Wednesday, December 7th, Pearl Harbor Day. And wanted to show you a couple of techniques here on a couple of day trades, starting with Apple. And let's go ahead and this is a daily chart, of course. And we were expecting continued downside, so it wasn't, a major a major technique or play here, but interesting, nonetheless. We had a topping tail here, meaning big money institutions, what have you, came in there. That wasn't mom and pop selling off on the 5th, Monday, and then we were in and around the 20. Normally, when the price is in and around the 20, you'll get a big move, one way or the other, either to the upside, downside, and you just look at different factors on the chart, and it'll give you an indication, higher odds, higher probability, which way it's going to go. Then we had a big sell-off candle yesterday, if you remember that video, and then here we are today. Let's go to the two-minute chart, where it was, how it got set up, and starting, we took it on the candle where the blue arrow is. Okay, so let me take that off. And the reason being, I have this bearish engulfing takeout candle. In other words, big red, basically big red candle. And this is how simple this stuff is. Simple, it's not easy because people can't wrap their mind around it. They think it's going to be, and that's the way Wall Street, your institutions, the guys in the strip centers, around town, with letters after their names, that sell pie charts, and but never really get you in, get you out of your investments. That's why people now, have lost so much, out of their retirement accounts, 401ks, 203bs, that sort of deal. Well, that's, a story for another day. But anyway, I just took out all this over here. So we knew there was, high probability we're going to continue. So that's where we took it. In other words, 2,000 shares on margin to the downside. And I don't recommend that, doing that. Okay, the only reason why I do this stuff, I really don't like the day trading, because people, look at it, oh, that's, fast, easy money. It's fast, but it's not easy. It's hard to do. It takes years to work up to that. I do this to show that our system works, and you can do the same thing by learning these techniques. And these techniques are set up a lot quicker on a 2-minute chart. They form because every 2 minutes you get a candle, so you have more opportunities to show, breakouts, breakdowns, different, patterns, that sort of thing. Okay, that's the main. And also, people think it's cool and neat and whatever, to be able to do that. So, but I recommend, actually starting off on a weekly chart, then going to a 3-day chart, then going to a daily chart. Matter of fact, our Patreon members, we have a proprietary trading system using a particular type of chart, that increases your odds probability of success. And then also it's for people that have real jobs, real careers, families, kids, they're running all over town, taking care of business, young families and stuff, and they don't have time to sit there and look at the chart all day. But that's anyway, here we go. So, of course, we had our always put our stop loss. You don't drive a new car off the lot without insurance. You don't put on a trade without, insurance. Your stop loss. Right here was the second stop loss. I keep an eye on it. That white dash line, on this black, it's easy to see throughout the day. So we just held this, throughout the day, because we were looking for a weaker market. And there was something else I was going to show you here, but I can't think of it. Let's see, what was it? Oh, okay. All right, this green candle here. Well, first of all, this one closed down, took out everything. This one closed on the 20. That's now this is different. This, closed, and then you had a head fake basically by the institutions, market makers, back up, and people were thinking, okay, Apple's going to run, run the day, et cetera, et cetera. So that's why, you need to think like a criminal. Okay, I don't know how else to say it. Okay, so and that helps you. So anyway, we closed under the 20 the second time. And so that was pretty good confirmation. Higher odds, higher probability we're going to continue to downside. So we did. Then we had another little head fake here, meaning they put in this green candle. This is green all the way up here. But I got a trick. Okay. Well, anyway, I'm not going to go there. But let's see the high to the low here. The halfway mark is right through here. Okay, and this is a huge man. This is I don't know how much. Man, I can't tell you how well I've done just on this little trick. Anyway, if price cannot make it back up this leg down when they start putting in a green candle, if they cannot make it back up through that halfway mark, huge odds, huge, probability you're going to roll over. This is just going to be a what they call a pause candle, the market taking a break, and then we continue a big move to the downside here. Here's another pause candle, but yeah, we couldn't. So that didn't scare me because I knew, it never touched that area. So I was very confident it was going to, continue to the downside. Okay, let's go to AMD here, and there was two things. First of all, we had a time count going up on those green candles, and our Patreon members know what that means. And then you see that red dash line. Oh, as it was moving up, we already knew where a brick wall, a steel wall. I mean, this is a wall that Trump would even be proud of. Okay, right here, this thing. Uh, it was going to take an act of the Fed to get it up through that area. So we knew that was going to be resistance. And as you can see, we didn't even get there. So we went in, took a chance. That was going to be our stop loss if it did run. But anyway, took a chance, got in here, worked out good. And what else? Let me show you this. This is um, Amazon, and we got to go to the daily. And this is set up for tomorrow. And you can watch this yourself and see if it pans out or not, okay? But anyway, again, we're on a time count. And if we, oil, I'm long, as you can see. In other words, I'm looking for a price to go up to the upside. Two reasons. One, the dollar looks like it's going to, continue to be weaker. And number two, the time count. Number three, the type of candle, indecision doji candle. And really, what you want to do, I'm just, kind of being a little loosey goosey here, but you really want to hold off trading this type of candle, even though it's a great candle. You want to hold off until either price pushes up through the high. Let me pull that in so you can see it. The high, where the blue dash line is, that's where the top of the price action was today. And the red is, the bottom. So anyway, if we roll over, as soon as we cross the bottom, I'll get out, lick my wounds, go on. But if we roll over, we go to the top, then I'll add to it because we could possibly go. And guess what I'm going to do here? Yeah, I'm going to pop my 50% line, that point 0.5 fib. So we run up around this area. Yeah, that's probably where I'll take. I don't want to get too greedy. I'll, take it there. And then let me show you the DXY. Yeah, descending triangle. I mean, descending wedge. Oh man, I've been talking this all day. Descending wedge under the 200. Most times they break out in this area of the descending wedge to the upside. Doesn't mean it's got to. Just most times it does. If the Fed comes in, supports it, yeah, we could get a big green bullish engulf candle to the upside, or we'll just trade sideways. That's the only two somewhat bullish ways to break out of this. If not, we'll come down and test this lower down trend line. But all right, guys, hang in there. Thanks for watching, and give us a follow on Twitter. Check us out on Patreon, and we will see you on the charts.